Hey everyone, this is Kevin at KL Investment Strategies, and what I'd like to do today is just do a brief summary of the holdings that I have in our 100K portfolio. And as of this moment, we're up 8%. We have 13 stocks in the portfolio that average out to about $45,000, and currently we're holding $66,000 in cash. First thing I'd like to mention is that the software that I'm using to upload our videos to YouTube are limited to 10 minutes. So what I'm going to do is, if I have to, I will do a two-part summary of what we have on hand. So if you do a search in YouTube for KL Investment Strategies, look for market summary or portfolio summary of part 1 and part 2. So the first thing I'd like to do is talk about the S&P, and what you can see is after we had our breakdown here in July, we came down and kind of held support here, and then once we bounced up and broke the 20 period moving average and the 50 period moving average here, you can see we've had a steady climb all the way up. And on Thursday and Friday we broke the 200 period moving average. So all of these are good signs for the markets and for the S&P. So what I'd like to do now is just quickly go over the 13 stocks that we're currently holding and give you just a brief summary of what my plans are for each of those stocks. So let's start out with ExxonMobil. As you can see, ExxonMobil is very similar to the S&P, where we broke the 20 and the 50 here, and we've also broken the 200 here. Now, I got in a little bit late on this one, but as long as we hold this 200 period moving average, then we're looking to see if we can't get up into this range here, which was our resistance level there. So I'm looking for a target of about 85 on this particular stock. The PE ratio on ExxonMobil is 9.82, which is actually quite low. So we're going to see what happens on this stock. And the other reason I wanted to get into ExxonMobil is because I wanted to diversify my portfolio. And at that time, I did not have any oil exposure in my stocks for the 100K portfolio. The next stock I'd like to talk about is Corning, symbol GLW. Last week they reported phenomenal earnings. They also had reported about 2 weeks prior to that they were going to double their dividend and also do a share buyback of $1.5 billion. So both of those are very good signs for this particular stock, because it means they're raising a lot of cash and they're going to return some of that cash back to the shareholders. So you can see here in this area that we broke the 20 and 50, and then we have the 200 way up in this area. So what that's called is a 20, 50, 200 squeeze. So as long as it plays out in that fashion, then we're looking for a target anywhere in this range here. Now, I got in very early on this stock, and I took profits a little bit from what I had originally purchased, and I think I took profits just about 11%. So I'm holding about half of my position to see if we can't get up into that target range. The next stock that I have in the portfolio is Ford. They did report fairly good earnings. It wasn't really good as far as net profit, but as far as the amount of revenue, the automaker has done really well in the last quarter. Now what I'd like you to see here is that we've had this nice run up in this direction, and then we've come back just a little bit. We're consolidating in this range well above this 20 period moving average, and notice that our stochastics are dropping down, which, as long as this consolidates sideways and doesn't break the 20 period moving average, if we can get the stochastics down into this area, what I'll probably do is add more right in here at about 1150. The next stock that we have is Verizon. Again, I want to keep my portfolio diversified, so I got into a telecom. Typically, telecom stocks, they give you very, very good dividend yields, and currently Verizon is paying 5.31% on their dividend yield. And I did sell some of this when it got up into this range here to take a profit, and then if it drops back into this area, I'll look to get back in. But the other thing I want to show you here is that, in case you're familiar with patterns, we have what's called a head and shoulders, which here is your shoulder, here is your shoulder, and down here is the head. So what we're looking for is, when you measure this distance, we're looking for the stock to move up the same amount there. So from 33 to 37.50 is about 4.5 points. So we're looking for this stock to eventually get up to about 40 or 41. The next stop is Citigroup, and the financials have had a tremendous move in the past 3 weeks. So what I did was I got in right in this area here. I took profits in this area, and I'm still holding on to a couple hundred shares just in case we keep moving up toward this 200 period moving average, which is where I'll look to sell the remaining shares that I have on hand. The other stocks that we have is, twice I bought the ETF for gold, and as you can see in gold, I actually got into this area, I got into this area again, and you can see we broke the 20 period moving average and we broke the 50, and now what we're looking at is a potential W pattern. So we're looking for this stock to retest the highs of the year right around 185. So I think that my own personal opinion is that everybody should have gold in their portfolio as a hedge against uncertainty in the markets. So, even at 10 shares, that would be $1,550. And like I say, I got 10 shares in this range, I got 10 shares in this range. So if it does drop back, I will probably add more, or, just keep the 20 shares that I have. The next stock that I have is Sprint, and this was one of them that I put on just this week, and it was purely a speculative play. But the reason that I did was because I got the stochastics roll over here when we made a higher low, and now you can see we broke the 20 period moving average. I bought 5,000 shares, and then when we got up into this area of about 280 and saw we couldn't break that, I sold 750 shares at 278. So I made a nice profit on that of about 14.5%, and what I'm looking for is my first target to be in this area about 309, but I also have my stop on the remaining balance of $2.50. So the worst I can do is gain 10 cents per share. The next one is Akamai, and as you can see, they had a big gap up here, and that was on an earnings report, but I got in on this area again on the 20, 50, 200 squeeze when we came back down and touched this area of support, and it held. So we have a nice stochastics crossover. I took some profits in this range, and then I am still holding on to 150 shares. The last stock that I have is Deere. Very good play on the international markets. Again, you can see that we had a big gap up, very similar to a lot of the other stocks. And what I did was I took a little bit of profit up in this range at 8.43%, and I'm still holding on to 60 shares. Now what I might do is, if this does pull back just a little bit, I'm looking at about 78.50, that if it drops back there, I'll sell another 20, and then I'll hold on to the 40. So that's just a brief summary of the stocks that we hold in our 100K portfolio. You can follow them by becoming a Premier member, and we hope to see you soon.